Welcome back. You're watching Power Breakfast. It's Cognizant that's come out with a good set of numbers, and they've beaten the street expectation. And Reema's going to take us through the finer points.
Well, a very good set of numbers from Cognizant, whichever way you read it. The dollar revenue for Q2 CY12 has come in at 4.9%. This beats the company's own guidance of 4.6% and even beats the street estimates, which had pegged growth in this quarter to come in at 4 or 4.5%. So in general, the dollar revenue performance from Cognizant has been strong and beating the street estimates. The other parameters like an operating margins, profitability was more or less in line with what the street was estimating. Also, this dollar revenue growth of 4.9% that we're talking about is much higher than even the rest of the Indian IT peers, which in dollar terms had reported growth anywhere between a -1%, the likes that we had seen from Infosys, to about a +3% from TCS, etc. So it's even beaten the likes of TCS in reported dollar terms, but of course TCS, etc. had a very strong constant currency growth. Forward-looking Q3 guidance for Cognizant has been set at 4.4%, very doable, and more importantly for the entire year, they continue to maintain that they will do dollar revenue growth of about 20%. So guidance still intact. Why is this so important? Is because in this quarter or in this year, most of the Indian most of the companies are facing negative cross-currency impact. So that generally shaves off a bit from your dollar revenue. So maintaining a guidance despite the negative impact of cross-currency is actually fairly positive. And we had a Nomura estimate which had said that they expect Cognizant to lower the guidance from 20 to 19%, only accounting in for the negative cross-currency, not so much about the volume growth. So maintaining 20%, absorbing the negative cross-currency is actually fairly positive. And even the management, when we spoke to them yesterday, said that they have absorbed $30 million in currency movement and still maintain their guidance. So that is actually positive. Now, to meet this 20% guidance, they need to do about 4.5% in Q4, which again the street believes is very doable, and that should happen. Even in terms of the other geographies or verticals, things are looking strong. So you have a BFSI which has grown by 6.1%. You've got manufacturing and retail, that entire sector is up about 7.1%. Geographically, America, which contributes a big chunk for Cognizant, has grown by 5.5%. Europe is the only soft spot, which is down close to about 0.4%. But in general, things are looking fine for them. And even the management commentary was fairly positive, and they have spoken about a pretty healthy deal pipeline, though hiring might be on the muted side. But all in all, these are a good set of numbers. Cognizant reacted well in the US markets. It was up about 11% post its numbers, and it should bode well for the Indian IT companies, especially where we have seen growth from the likes of TCS and HCL Tech. So watch out for Indian IT as well. In fact, on that note of Cognizant, let's get you the Cognizant management as well. Gordon Coburn.
The economy is fragile here in the United States. Obviously, it's very difficult in Europe. Given that, we maintained our full-year guidance of at least 20%. And that maintaining that guidance included absorbing significant currency movements that happened since early May. So we absorbed over $20 million of negative currency movements and still maintained our guidance. We are seeing a change in the market towards what we've referred to as transformation deals, which are larger deals encompassing a broad range of services, a broad range of geographies, focused on how do you deliver change in operations to the clients. We won several of those this past quarter that we talked about our earnings call, one with Philips, one with ING US. There's clearly others in the pipeline. So I would agree with some of my peers who said there is a shift towards larger transformational deals, and we're thrilled by that.
All right, and in terms of results impacts, we'll be looking out for DLF today.